Mr. Mark Selby, how are you, sir?
Mr. Matthew Gordon, doing very, very well.
Very good, very good. How's you still in the new house? You're in a temporary home while your house is being done up. Are you surviving?
Yeah, so far so good. Yeah, we've got most of the boxes all put away now from the move and are all set up. So just around the corner from watching a house get pulled apart and hopefully rebuilt in less than 15 to 18 months. So fingers crossed.
You got my wife thinking. She's already looking out for. She wants a new house. It's your fault, just so you know.
Oh,
thanks.
Sorry about that.
Cheers. That's a true story, actually. Unfortunately for me,
they're cheap, and their new houses are cheap, and you never have to do a pile of renovations after you already pick up the sort of new house. So no worries.
I know you're joking. Our house prices around here are up 40% since COVID came along. So there's that, and then there's some strong indications that there'll be a lot of modifications to the next one. So anyway, we better make some money investing. So we need your help. Okay,
here we go. Exactly.
Should we start with a little bit of market news and see what's going on out there?
Sure. So nickel was not immune to the impact of Evergrand. So huge swings. If you're a trader, it's great because it seemed like every day things were up at least 1 or 2%. Right now we're hanging in just over $19,000 a ton, having around $865 a pound. So, again, we popped up above 9. This 850, 860 floor seems to have been holding. And again, fundamentally, no change. We're seeing pretty steady inventories out the door. Sort of more than 1,000 tons every day. And again, there's only about 160 something thousand tons left on the LME. So. It's a meaningful inventory with withdrawals.
Okay, and our Chinese friends, there seems to be movement on a lot of fronts and a lot of commodities. What are they doing for nickel?
Yeah, so on nickel, it's interesting. You don't see a lot of talk about them emptying stockpiles, unlike copper and zinc and some of the others. So again, I think that's a sort of a good sign for the metal that the Chinese don't seem to think that they've got excess inventory on hand, which they have in the past from time to time. Again, nickel's not at copper is close to an all-time high. Nickel's not at $50,000 a ton. I think if nickel was back up to those, close to those all-time highs, you might see a little Chinese nickel come out. But no, the market there continues to be quite strong. You've seen NPI prices and stainless prices both move higher last week, because again, one of the key things that's hitting a number of metals is that we're seeing power rationing across the country, and as NPI is quite a power intensive metal like aluminum, there is going to be some production come off, which is really tightening up the Chinese market. We're starting to see a little inventory pile up, which it should be doing on a seasonal basis, but it's still far below where it needs to be because, at this point now we're about 6 weeks away from the Filipino rainy season to start to have an impact. So, which is great. The other big stuff this week, and kind of explains the 1,000 tons of nickel inventory coming off every day. INSG, who's the nickel study group who tracks all data. And again, if you're serious about sort of getting lots of data on nickel, I think a subscription's about $1,000 a year, something like that. The deficit in the month of July alone was 24,000 tons. That annualizes to 300,000 tons per annum, which is more than a 10% deficit. What's been pushing that is demand is running as of July at a 3 million ton per annum run rate, and that's up 25% from 2020 annualized, not month over month. 2020 demand was just under 2.4 million tons, and right now we're running at 300, close to 3 million tons, and we should end the year now, I think, close to 2.9 million tons, which is about a 20% increase in year-over-year demand, and a massive deficit versus most of the wise analysts that we talked about. And again, people can go back to our discussions at the beginning of January. That most of the market was calling for 50 to 100,000 ton surplus. I saw the market as being balanced. I've been even surprised about how, I was talking about demand at 10 to 15% and closer to the high end of the range. So if we end up at 18 or 19, 20%, it's a truly spectacular demand growth.
So here's the thing. Like we occasionally, fumble over to copper. We're talking nickel. We're talking battery metals. We cover a little bit of ground here, Mark.
Yeah.
There's a slight concern from retail investors because they're looking at the market and saying, right, okay, there's a big battery revolution coming. The supply-demand gap on all of the commodities needed are vast, looking out, okay? Yet, what they're seeing at the moment with battery metals generally, we're seeing it on copper, we're seeing a little bit with nickel too, is, okay, the equities have come off a little bit. You're seeing a sort of sideways movement and a slight disinterest, it seems, by retail because they're not quite sure what everyone else is thinking, right?
Yeah.
So how do we explain that? I've had some CEOs come on and go, oh, well, uncertainty in the economy. Oh, it's crypto, Bitcoin. Oh, it's uranium. Oh, it's something else. And there's always something else. We can't explain it. Right. So what's your take on it and what should people be thinking about investing in nickel, copper, and the other battery metals at the moment?
Well, again, as you go through a cycle, again, everyone does think, but you kind of think, oh, it's sort of a straight line kind of movement. But typically what happens is it's move, consolidate. So, from a year ago, May, when we talked about copper at 240 or 250 and it said it's going to have a run here, so you should buy all the high torque copper names like Capstone, Deseco, and everything that have now moved up 10x, and probably given up a couple X of that.
We did say that.
Yes, we did. So that I would say that from May of 2020 through to February earlier this year, that was kind of leg one in the commodity and the equity repricing. And then, the equities have generally all come off anywhere 30 to 50% around most of the commodities. And so, what people need to believe now is prices, copper peaked at 450, nickel's still around its $9 peak from February. Is okay, do I believe that these higher prices are going to be sustained? And am I confident that we're going to see another leg up from here? So I think what you need to do now, and again, when you have the first move up out of a sort of a cyclical bottom, is everything moves up. In that second leg up, not everything is going to move by the same amount, and that's where the supply demand fundamentals and outlook for specific metals really start to emerge. So, on the second leg up, it's again, nickel is in great shape. At just under. It's around $9 a pound here. The stats that I just quoted there in terms of massive market deficits. Yes, we're going to see another big slug of NPI come to the market through the rest of this year and into 2022. But what this 20% demand growth really highlights is long-term stainless steel demands 4 to 5% a year. Every analyst underestimates it. This year it's grown at 10 to 15%. 10 to 15%, and we've seen probably we'll end the year with 120% demand growth from the EV sector, which is now starting to be big enough to matter. So, I think it'll be into next year and the year after, where if you start to see in some of these, critical metals, where the EV demand really starts to have an impact on the overall supply demand balance, I think that's the catalyst to start to, the equity people will wake up and go, oh, okay, it's going to be at least $9 for a long time. And that makes a lot of these stocks, really valuable. On the copper side, again, I'm not sure, I'm not a raging copper bull. But again, I don't think it's as much as you have to believe that copper is going to go up to $5 a pound. Even at today's levels, the whole copper chain is discounting a much lower copper price. So, you've kind of got probably, a 30% more cushion on that. I know some investment analysts do a pretty good job of tracking what sort of the underlying copper price where the market's trading today. I don't know off the top of my head what that number looks like, but I know it's far below, the kind of, 4-ish a pound that we're seeing right now.
Okay. So it's basically trust the numbers, believe the thesis, and take your appropriate investment action, whatever that may be.
Yeah.
We're going to call it again.
It's just really tough because, again, from May of 2020 through to February, I thought, oh, it's great. Everything I thought was going to happen happens. and then the news is still good, and then you just watch your stock retrace 30 to 50%. You're like, what's going on? And it's the key is to have, if you believe your thesis, is to have the conviction to get through these retracings so that you don't panic and sell, after it's retraced 50%, and then a 2-week period, just watch the, because again, these things don't happen in nice straight lines. There'll be some catalyst, and all of a sudden, all the equities will be up 20 or 25% in a 2-week period, and you just left all that money on the table, right? So, if you believe your thesis, as long as you don't see some fundamental facts that change that underlying thesis, then stay invested and get ready for that next move higher.
Yeah, I think that's right. I mean, we do talk in other shows about your investing strategies, and perhaps we'll talk about that again. We need to get on with this because we've got a lot to talk about. I'm excited to say. So we're going to talk about the NMP demerger of WTD. We're also going to, I want to actually, if you don't mind, spend a couple of minutes on the nickel, the Canada nickel assays. But the bit I think people should hang around for was there was a great piece by one of the members of Percent inside the Crux investor community, which kind of shared their thoughts and broke down his thoughts on HPAL, heap leach, low-grade nickel sulfide, and nickel matte from ferronickel. And I think there was a lot of good things in there, and there's a few things we just need to, a little bit nuanced, we need to just correct or just redirect. But I wouldn't mind talking to you about that if I may. So why don't we start off with WTD? Thoughts on that? Because I think we discussed that in the club.
Yeah, so it's good to see that you basically these comments come out of the club, and again, I think it is good to have, it's a good view in terms of what people are thinking. So, in terms of that WTD spin out from Neometals, I think you said it. It's a higher nickel price project. That at today's prices, you need a nickel grade closer to 3 to 4% than kind of the 1.5% they're at. But the way to think about it, and you said that CEO sort of was pretty clear on this. It's a much higher nickel price project, and it's it becomes a real call option on the nickel price. But again, call options played properly can be a tremendous investment. Just like call options, they're played well can be a great trade. So if a mine needs a higher nickel price, you can generally pick them up pretty cheaply. We'll see, again, given the track record of these guys, we'll see how cheap the stock is when it comes out of the gate. But the key is as long as the team can execute when the option is in the money, that's what you have to be careful of. Then they're a great way to get levered torque. Again, at this point in the cycle where you're hoping that, okay, we are going to see another leg up in prices, and a lot of stocks have already moved 5 to 10x. This is a way to get some great exposure to that next, massive leg up as a call option. So, that's the key. Options can trade to zero. There's a window. You're not going to hold this forever because there's some fundamental underlying cash flow. But again, if you treat it as a call option and trade it that way, you can generate some pretty outsized returns. Again, if you've got conviction in your underlying investment thesis.
So let's talk about Canada nickel. I think there was a little bit of a comment with regards to assay results. What's your feedback? What's your thoughts?
Yeah, so hopefully I am speaking for the hundreds of junior mining CEOs out here. I know investors are frustrated. I can tell you I'm equally frustrated. But the assay labs are chalk. Just completely, they can't hire enough people. They don't have enough equipment. And, again, when we started this project 2 years ago, I had 9-day turnaround. From one lab, I'm getting 8 to 9 week turnaround now. So 7 times longer. And then another lab that we went to, because this one looked like it was struggling. Our first lab looked like it was struggling a little bit. So we added some additional capacity, very credible, extremely credible. We do a lot of business with them on some of the other work that we do. We're now at 16 weeks, and we still have not, there are assays from 16 weeks that we still have not received. So it's going to be longer than 16 weeks before we get some of these assays. And we've, finally had a come to Jesus meeting with these guys. And they basically said, look at, they just started the call to say, we apologize, but to be honest, we can't really give you any visibility right now on when we can solve our people issues, and to be able to deliver anything in a window. So they basically said, take your business elsewhere at this point in time, just because we can't guarantee any kind of turnaround. So that's the reality of the market. So again, investors, be patient. If the company you've invested in has always disclosed material results when they come out, good or bad, when they're material, then be confident that when that time comes, they will disclose those results. So again, hopefully I'm speaking on behalf of not just where we are with Canada Nickel, but I know for a lot of CEOs, it's just driving them crazy.
Yeah, every week, every conversation, it seems, because you're right. It's not just, it's the amount of material coming through now. You kind of forget that. It's not a case of it's the same, but they just slowed everything down because you can't get people there. But the amount of material now, because a lot of companies got funded last year for a lot of drilling. That also happened, right? And you can't go out and train people up to kind of, it's not like a shift at a supermarket. These are skilled jobs.
Oh, no, you saw the news of, FedEx talking about having bottlenecks in there. I mean, I work for a courier company. I can tell you sorting packages is not necessarily the most highly skilled. And if they're getting people at this skill level, running assay equipment, is a whole other skill set, right? So it's unfortunately not going to get fixed anytime soon. If I had an option of paying 4 times the price for assays for certain drill holes, I would gladly pay 4 times the price. But again, companies are providing a lot more information just on the visual description of the core. We've been able to do that with some of the holes that we thought were material to know about. But again, just be patient. The assays will come. And again, trust your management teams that they'll let you know, and there isn't anything nefarious happening in the background just because you haven't got as much news flow as you once did.
Right. Well, let's do the thing which I talked about. There's a member put up a great piece because they put a lot of time and effort into it. And, it's a long piece. That's what I like about what we're seeing in percent, that people are willing to give a lot of time up, share a lot of their thoughts and thinking and ask questions, not these kind of, 2-sentence kind of pithy remarks into social media. So it's really good. A few comments there. So we talked about HPAL, heap leach, nickel sulfide, and nickel matte effectively. So, you've seen the piece, HPAL. So what would you say to the thinking there? Yeah, no,
I thought it was great because again, I think it sort of is a good marker of, where I think people have got it right, where people are maybe latched on to some misconceptions that have been sort of promoted in other pieces of news flow so again, it was amazing to see. And again, I think it could allow us to have a kind of a meaty discussion on it. So first off, HPAL, I think rightfully skeptical about, it being a capital source, a production source going forward. The only thing I would say though is, again, let's see how China does in Indonesia. Again, I don't think, if they're going to ramp up as quickly as the bears in the market think it's going to ramp up. But at the same time, I think it will ramp up. If you look at what China did in Papua New Guinea with Ramu, that was a much more complicated project. And they did eventually get it ramped up to nameplate, and it continues to run, at nameplate or above nameplate capacity. So, the HPAL stuff will come. And the question will be what the final capital intensity is. So again, it's tough. None of these are I don't think any of these are publicly traded companies. So you'll never get the real answer as to how much capital they are actually spending. So I would say it is total crap. But I'm pretty skeptical about anything coming online in the rest of the world, but we'll see how China does in Indonesia.
Yeah. And so I just want to say this and remind people that we're having this discussion in the context that you've always said in every interview, we need all of the above. We're going to need all the nickel, right? So that's the context here. It's not to have a go or dig anyone out here. It's right. We're just sort of trying to look at the pros and cons of each process, right? Just want to remind people.
Yeah, exactly. And again, the 20% demand growth in the past year should underscore the fact that, we will need a lot of supply sooner than later, and there's just no visibility on it. The other technology, and again, part of the conversation, and I'll come back after we go through the key pieces, just in terms of some of my comments around RCF. Heap leach, it is unproven. Again, nickel, you had, Inco was one of the world's largest mining companies for a long time. And, there were a number of other large nickel players. And so, again, always be skeptical about new technologies because, again, there's a lot of companies that had a lot of money to spend on new processes. So again, we need new processes. I hope new processes are successful, but just tread carefully as a retail investor, in terms of the ability to do it. Now, the specific example was Brazilian nickel in a laterite project in Brazil. There are a lot of the people in that were involved in a company called European Nickel that had a heap leach project in Turkey in the early 2000s, which looked like it was a technical success, but they just got unfortunately wrapped up in a whole pile of permitting, which were ultimately local political issues. And so we never got to see that project, get to fully ramp up. So, we'll see how the heap leach goes. Again, they've got the track record to do it. So it's private right now. So you couldn't trade it if you want to. But, again, just in terms of the, you don't see a lot of heap leach projects in tropical places. They tend to have to be in drier places. I'm not sure exact the climate in that part of Brazil, but generally laterites form in tropical conditions because you need lots of rain to leach the minerals you want out of the rock and into the soil. So unless that piece of land has moved geologically over time to a place that's drier, it's a little trickier. The ones in Turkey, were better that way. The second, the second part of it, again, when you think about, okay, the primary technology for leaching this type of rock was HPAL, right? So people don't go to high pressure, higher temperature, really low pH acid leaching to be able to get the nickel recovery that they want, unless they kind of have to. So, we'll see how it goes. Again, fingers crossed that they will get there. I mean, the great thing about heap leach, I was on the board of a couple of very low grade heap leach gold operations in Mexico that got sold for huge amounts of money. Because again, in the right location, heap leaches, it can be a free cash flow machine. So, we'll see how they do there. And again, they've seem to have the right team and obviously with the RCF investments like that, getting the right amount of capital.
Yeah.
So the next one,
it's just on that. So it's like, so it can work. It's going to be location specific. I think we've seen heap leach gold companies come on and talk to us. South American heap leach gold companies come and talk to us. It's possible. It's a question of, what does that do to your costs or, the ability to actually for it technically to continue to work. So we had a company on recently which was talking to us about what things that they had to do to ensure that it wasn't just the productivity and the efficiencies weren't damaged by the amount of water that they're having to deal with. So it's case by case, but point made about heap leach.
Yeah, the third one was low-grade sulfides. Again, one of which obviously with our project are very close to. The key, one thing really want to drive home, low grade does not meet high cost. We are in the middle of the first quartile. If you look at FPX, they are first quartile operating cost. The issue, the challenge with the low grade tends to be the capital intensity. If you have to build a big milling operation in a remote location, that's obviously going to cost you a big chunk of capital. We're fortunate where we are in Timmins that we have all the infrastructure in place. So our capital intensity is relatively lower, and we've got the benefit from all of the infrastructure and support locally, which allows us to be helps us be in the lower part of the cost curve. The mid tiers and majors, these are the projects they built. Like these large low grade resources are the only BHP Rio Tinto size resources that are out there today. One of the points I make in the nickel presentation is that the two biggest sulfide discoveries of the prior decade in the 2010s was Sakatti and Nova Bollinger, and those total were about 300,000 tons of contained nickel. which is, basically will be 1 to 2 quarters worth of Tesla's nickel consumption in 2030. That those just aren't big enough to move the needle. BHP Billiton does not build 4% copper projects anymore. They're building stuff that around 0.5%. That's what's out. And then, that's BHP. Everyone else is dealing with copper projects that are 0.3 to 0.4% or lower. And again, the best example, Bleeden's ATIC mine, copper grade 0.2%. It's a first quartile cash cost producer. It has a lower cost than Sandfire in Australia that's mining 20 times higher grade material. So don't make the mistake of just writing off low grade just because it's low grade and assuming it's high cost.
Well, it's kind of interesting. You made me think about back to the near metals conversation, which is at the right price. These projects will work. But if you look at a sort of Giga Metals or Neurons, let's put it this kindly, they're off the beaten track. The infrastructure costs will be significant, and it will require a certain type of company with a large balance sheet to be able to do something about that one. So it kind of helps, certainly in my mind, shape up an order of play, as it were, in the marketplace. Who's gonna go first? What are the targets that people are going to look at first? So yeah, I think it's kind of interesting. The other thought that came out this week was around this kind of low grade component, is that we've seen people not struggle with the concept that of how something's at 0.3 could possibly ever be economic, and we've seen it in gold too. And I think it's one of those things, people gravitate towards these high grade headlines in press releases. So you guys kind of suffer from, I guess, a lack of knowledge. And do you think that the market's changing for you? Is that a battle you're still having to fight, or do you think people are getting it now?
I think more people are getting it, but it's still a battle we have to fight. And what's actually, to be honest, what's a little more challenging these days is that it was my past life with RNC with Dumont in 2012, 2013, when we were finishing the first pre-feas and feasibility study. There were literally a half a dozen single asset copper companies that were worth between $400 and $800 million. It was Augusta with Rosemont that got bought by Hudbay. It was Terrain with Mount Milligan, which is now in operation with Centerra. You had Norsemont owned Constancia, which is now in operation with Hudbay. And those were all safe jurisdiction, 0.3-ish kind of copper grade projects that on a value per ton basis in terms of what you were mining were very similar to what we were producing in Dumont. Right now with Colombia and Ecuador, which are much higher, which are higher political risk, although after the events of the last year, maybe not so much than Chile and Peru. But those are new areas with new discoveries. So you're seeing the copper grade sort of around 0.6 to 0.7. So that that makes it a little more challenging in terms of the comps. Versus in 20 again, all those mines at that time, they all got bought, and a bunch of them are in production today. So that's the ATIC example is just a really good it's a low grade copper. It has a little bit of gold and silver as a byproduct, and it's a low cost operation because you're in a good jurisdiction with lots of infrastructure and a pretty high productivity workforce. Again, Scandinavian labor is never cheap, right? So, but production.
True.
So.
Their taxes are big, but their pay is big too. I was talking to Joe Kadrovic, who's the CEO of Cobalt Blue. But they've got an obsolete cobalt project, and he kind of did an interesting comparison, and because he's kind of helped us, and we've actually done a bit of consultancy for him in terms of introducing him to a few people in Europe on the battery side. But he's saying we've got a big project, but it's enough for our entire life. It's enough for 1/2 of one gigafactory, right? Slightly scary thought when you see the number of gigafactories being built around the world. And that's why he says to me, these guys can't get enough of us, because they need to plan 5, 10, 15 years out. If they're not doing that kind of planning and securing their, and this isn't just a cobalt story, this is a nickel story, this is a copper story, this is a graphite, tin, everything. These buyers are really, really nervous about the ability to get the supply 10, 15 years out. So, it comes back to, we need all of the above, but I just love that graphic. It just helps people's minds go, oh boy, I can see the supply deficit thing a lot more easily now. It's scary.
Yeah. Oh, yeah, no, it's coming. And again, once you see some more, just like in lithium, ever since Tesla did that deal there, you saw then a whole series of lithium acquisitions and offtakes and so on and so forth. I think in the nickel developer space, again, there's not that many out there, but as soon as you see more, some deals get done, you'll see even more activity. Again, we've been watching BHP and Wyloo battle it out for Noront, so that's there. But again, that planning perspective, it got driven home. So I was at one of the key people in the Korean battery supply chains, visiting one of their key production site, and it was very striking. We sort of coming off the highway and we get into, okay, this is the project site. We just drove through some empty land for a while, and then all of a sudden, in the middle of this big huge chunk of empty land was the factory. And oh, that's interesting. And then we get in, and they talk about their future expansion plans. Within 7 years, this entire massive site was going to have, 5 additional plants built all around this sort of initial first phase of it. And again, talking to other supply chain, it's amazing to think, well, we're going to build this plant. We don't know who our customers, we don't know who our suppliers are going to be, but we know that if we want to hit this production target, we need to start to plan to build this project today. That's the kind of, the thought processes that are there. So I think it's going to be fascinating watching this whole thing unfold.
But they're in a lucky position. They've got the cash to be able to do that. Imagine, a public company walking into a bank and saying, hey, I don't know who the supplier is going to be. I don't know who the end buyer is going to be. Can I have some money, please? It's like, what?
Yeah, I'd like $2 billion to build a plant, please, and thank you. Yeah. Oh, no, it's crazy, right? So just so I don't lose it, I think the other fourth point, because I think on this guy's presentation, is the nickel matte. So so again, this is something I've talked about for 3 or 4 years. And again, you can go back to our earlier presentations saying it's a no-brainer. There's no such differential versus class 1 versus class 2. You can move nickel units from any hole in the ground to any nickel consumer. As of a year ago, we didn't necessarily have all the capacity to be able to make those transformations, but we're now doing it. And the cost to make matte is, it's less, it'll be less than $1,000 a ton in terms of operating cost to get there. It'll be in that order of magnitude. And so, again, in the cobalt market, sulfate trades at a discount to metal. Yes, today there's huge premiums for sulfate versus metal, but as the Chinese build all the conversion capacity the market needs, and then 2x that, because that's what they always do, you're going to see that, that's that premium disappear. And what it'll come down to is the path from whatever the cost is from the path to metal versus the path to sulfate, and that differential, will come through. And again, in a lot of locations and for a lot of materials, they'll be able to use high grade concentrate or matte and have a cheaper path to market than trying to take it all the way to a 99.9% metal.
So you referred earlier to the fact that the companies, they're not public. It's very hard to work out what the costs actually are and what they're actually going to do and when, compared to obviously the public markets. But there's still going to be pressure on those guys if they want to feed into ex-China market for any of their product, right? With the HPAL component. Obviously, in China, it's going to be a different story, and I guess the bulk of this is all going to go. But if the ex-China stuff, they're going to have to, toe the party line when it comes to the kind of the greenification, the green metal, the green energy story, all of these things. They're going to have to toe that party line. And do you think that they're going to make any effort to tip the hat towards that?
Oh, I think they are for sure. I mean, there was some discussions a few months ago, stories that came out about a massive hydroelectric project being contemplated in Kalimantan, 11,000 gigawatts of hydroelectric power, and that, Tsingshan and some of the other Chinese guys, I don't know if they're going to run an undersea cable from Kalimantan to Sulawesi, or are they going to build new plants there, what the plan is per se. And there is some laterite there, but not nearly as high grade as in Sulawesi. Again, the Chinese generally often do what they say they're going to do, but again, I'm not sure if I'm not sure exactly where these are in Kalimantan, but generally just a lot of tropical rainforest that's there. So I'm not sure flooding, thousands of hectares of tropical rainforest is going to be equally welcome by the environmentalists who are buying their cars for a low carbon footprint. So we'll see how that unfolds. So they're at least talking to it today. Let's see sort of what they come through in terms of concrete actions to really lower their carbon footprint, because it's a massive issue in nickel. There's just so much CO2 produced with every ton of nickel.
Yeah, maybe that's a bigger topic for another. I know we have briefly touched upon it in the past, but it's going to become so important. Certainly, all the conversations that we're having. In fact, yeah, it's a big conversation for another time. Listen, we just mentioned a second ago. BP, Wyloo, Noront, BP haven't come back yet with a counter offer, have they?
No, not yet. There's some official steps that have to happen with the Wyloo bid. So I'm assuming until all of that's completed, BHP wouldn't make their counter until that specific time. So the market's still expecting something because it's trading above the Wyloo bid. So we'll see what unfolds over the next few weeks. And again, any marker there is just a tremendous marker for our project, given that we're a couple hundred miles to the east, several hundred miles to the east, with a lot more infrastructure around than what they've got at Noront. So we'll keep watching brief on that one. We did say we'd talk about a few companies. So Gungnir Resources. Yeah. So again, I've always said, if you see a multi-% drill hole intercept, you should always pay attention. They're a scarce commodity in the nickel business. It's good. So since the end of August, now they've released 3 or 4 holes, all with multi-% nickel. Now the grade's good. Intervals okay. It's a little on the narrowish side, and they're drilling around a resource that was previously defined. So and for some of their sections, it looks like some of the drilling may have cut some of the stuff off. I don't know. We'll see. And again, if things bulge out in a certain direction, might see what happens there. But it was nice to see some new high grade nickel hits from somewhere in the world.
Yeah, I was actually surprised by that, because obviously they did a financing before that announcement came out, and it kind of, I guess it gets you to kind of wondering the order of play for some companies of how these things get done. I mean, I'm not knocking anyone. I'm kind of interested in the timing of these things. So we've seen companies play this in different ways. So what's your take on that?
Yeah, no, to be honest, I was a little surprised. The stock moved up 3x, which is good, but the market cap is still relatively low. But there was still a lot of stock came out. So I don't know. We'll see how that plays out. Again, I think hopefully some more drill results there. But again, always be cautious when you see lots of news flow, lots of stock come out at an early stage. In terms of what your upside might look like. So
okay, another one to keep our eyes on. Look, I think we'd better wrap it up there, Mark. For this week. Look, one, it's good to have you back for a start, and at it again. We will speak to you next week with what a little bit more company news. You think?
Yeah, for sure.
Okay, brilliant. Have a good one. See you soon.
You too. Thanks, Matthew.